Welcome to the second segment of Fairview's Fearless Investor virtual event. So this panel discussion really just shines a light on investors who are leading by example. You know, they're building enduring emerging manager platforms. I'm Michelle Chowtai, and I have the awesome responsibility of leading business development at Fairview, and I'm simply delighted to be here with you today. I'm also thrilled to moderate this discussion with four of the most dynamic women asset allocators in the industry. These fearless investors are responding to the gap in asset management and are leading by example. Today, we're going to learn who they are. We're going to hear all about their journey to becoming asset allocators. We're going to get insight on their organization and how they are diligently working to enhance their portfolios with a diverse set of managers. So please join me in welcoming our panelists as I introduce them. Natalie Jenkins Sorrell is Deputy Chief Investment Officer at the $3.4 billion retirement fund of the City of Dallas. And she also led the effort to build the next generation emerging manager program at the fund. Next is Christine Looney. She's the Deputy Director, Mission Investments at the $14 billion Ford Foundation. She supports the investments under Ford's $1.2 billion mission investment funds. Then we have Kim Paulette, is the Senior Investment Officer at the $23 billion State University Retirement System of Illinois. She has responsibility for the plan's $2.4 billion private equity portfolio. And our very own Cindy Sang is a partner and a member of the investment committee at Fairview. And she just happens to be one of the most analytical thinkers I know. Welcome, ladies, to this panel. So, you know, what does it take? There's no doubt that you must have had to overcome steep barriers and enormous imbalance to become who you are today. Tell us about your journey. Why don't I start with you, Natalie?
Good morning, everyone. First and foremost, it's such an honor to be here. We have been investing with Fairview for, I think, just over 10 years now. It's been a wonderful journey. So thank you for having me. But, you know, not so thanks on following that previous panel. They were, they were fantastic. Daphne, Evelise, all of them. So kudos to them. Great to be here with you this morning. And I'll be brief and just say good morning. I am in Dallas. I'm a Jersey girl through and through, born in the Bronx and raised in Inglewood, New Jersey, and made my way to Dallas. My career led me here. And I'm also the beneficiary of a couple of programs and organizations that have been mentioned previously, but SEO, and I'm a proud TWIGO fellow as well. So I stand on the shoulders of people who came before me. And that's how I kind of got, where I am today. I found out about investment banking through SEO because one of my classmates from Spelman had been an SEO the year prior at Goldman Sachs. She told me about the program. I interviewed, made it to Wall Street, and the rest is kind of history. But prior to that exposure, I knew nothing about asset management, about investing in private equity, very, very little. But I'm so glad to be here today. And again, thank you for having me. I'm looking forward to speaking more on this panel.
Thank you for that. So I'm going in the order as I see you. So Christine, tell us about you.
Great. Well, yes, I will too extend my thanks to Fairview and say what a privilege it is to not only share the panel with this group, but also the group that preceded us. So I stumbled into finance. I think I graduated from college and I spent my first year doing a domestic volunteer program. And a family friend, said, what are you thinking of doing next? And I really wasn't sure. And he said, well, there's this great analyst training program at Chase, which dates me because it was, before JP Morgan Chase. But He said, you should apply. I think it would be, a great way to build your skills and test out finance and investments. And so I did. And I knew pretty quickly kind of two things. I think one, that I was really intrigued by the role capital could play in supporting businesses and job creation. But I had this real desire to think about the role finance could play in applying to a lot of kind of social challenges. And so I quickly kind of left, probably after like three years, to go to business school as a career switcher. And I did a little consulting in the minority business community, and then really landed in what has become like a real dream job at the Ford Foundation, on a team that was thinking about just what I wanted to do, which was the role investment capital could play in supporting the Ford Foundation's social justice mission. Now the work has evolved over the years, and today we have two pools of capital that the team I sit on oversees: $1 billion allocation from the foundation's endowment and a $350 million kind of catalytic pool of capital. And an important priority for both pools is advancing diversity. As a foundation that's seeking to reduce inequality, a key job for our team is to look at the inequality that exists in the markets today and the role we can play in contributing to some solutions to them. And so for us, allocating capital to diverse fund managers, our theory of change there, as some of the panelists before me said, is really we see a lot of ripple effects from that strategy, not only in terms of the ultimate way capital could kind of be driven down to a more diverse set of founders, but then how those founders invest in their communities. So we see it not only as an opportunity to kind of reduce inequality in the kind of significant inequality that exists today in terms of asset allocation, but also think it's really good business and a way to create alpha in our portfolio. So great to be here.
Yeah, that's amazing. It's interesting how many of us, got our start in banking. I'm going to pass it on to Kim.
All right, thank you so much, Michelle. And again, I just want to reiterate my thanks to Fairview. Thank you for having me and for hosting today's events. You are a valued partner to SIRS and have been for some time, so thrilled to be here today. So as Michelle said, my name is Kim Pollitt. I'm a senior investment officer at Illinois SIRS, responsible for the private equity portfolio. I've been at SIRS for about 18 years now. And although I've worked in private equity for some time, I've really only focused exclusively on private equity for the past 2 or 3 years, just because we didn't have enough staff really to specialize, one person to every asset class. So we were more generalists. But as the private equity portfolio grew, they were looking for someone really to focus exclusively on private equity, and I raised my hand high because I wanted it to be me. So prior to coming to SIRS, I spent 12 years at Illinois Teachers, where I was the deputy CIO of public market investments. So I've kind of migrated over to the private side, which to me is fascinating. So I'm happy to be here. Just a little bit of background on SIRS and our history in private equity. Our approach to accessing private equity in general has changed over the years, and our approach to working with diverse firms has changed as well. So from inception of the program, of the PE program in about 1990, we really used a discretionary separate account model in the early days, or fund to funds after about 2006. And so under that model, our investments with diverse firms, and when I say diverse, I mean minority owned, women owned, firms owned by people with disabilities, it really took place under dedicated programs. There's certainly, we worked with several global fund of funds programs, so there was certainly some exposure to diverse and women-owned firms, but frankly, there wasn't a lot, and we wanted to supplement that. We had been, as a public fund in Illinois, we had been more successful in working with diverse firms on the public market side, but just had less success, in the numbers on the private side. So we wanted to change that. So in our first step in that direction was in 1999, we began working with Progress Investment Management. And they helped build us a custom, it was a small program, but a custom program focused on diverse private equity funds. And so from there, we just slowly, because public funds don't do anything quickly, we started to slowly build out a diverse private equity program. So in 2004, we began the first of several commitments to Muller and Monroe Asset Management as a fund of funds provider. And like Progress, they helped us expand our portfolio into diverse firms, very diversified portfolio by stage and sector. And then in 2014, we began our relationship with Fairview Capital. And Fairview's portfolio was a little bit different. It was a fund of one structure where we are the only LP, so we can control the strategy a little bit better at the top level. We committed $75 million to Fairview, and they made commitments to diverse GPs, diversified across stage and sector, but it was focused really more on the buyout space. And so that's just how things kind of continued to roll for the next several years. So fast forward to 2018, and that really marked the beginning of a change into how we implement our private equity portfolio. So it was largely a result of an asset liability study that happened in 2018, where we saw the private equity policy target go from 6 to 11. And you know, how many times have you seen that over the last couple of years, right? Public funds, corporate funds, everybody's increasing their private equity weighting. And so we wanted to really reevaluate, is fund of funds the best way for us to access private equity? And is there a better way to do it? So we initiated a search. We retained a partner, to make a long story short, retained Torrey Cove, who is now Axia Torrey Cove. They're our discretionary advisor. And what that decision did really was allowed us better control over our top line portfolio. But importantly, it allowed us to directly commit to more diverse and women-owned funds, because we had not had great success in doing that to date. And of course, we like the idea of lower fees as well. So over the past couple of years, we've been under this new model now with Axia, and Axia, they focus on funds of $300 million or more for SIRS. They focus on small to mid buyouts primarily, but also will do some venture. But importantly, our program, our overall private equity program, is expected to commit at least 20% of funds to diverse GPs, at least 20%. And I can tell you that is far greater than what we had experienced historically. So we were, we set our goal. We set a high goal. We were anxious to see, if we could achieve it. And I'm happy to say it's only been 2 years, but over the last 2 years, the portfolio has actually committed in excess of 30% of commitments to diverse firms. And so, we're encouraged by that. We're a long way from being done, but we're encouraged by that. But just one last thing. So I mentioned that Axia focuses on funds over 300 million. It was so important to us that we just not stop there. We think it is so important to have exposure to the smaller end of the venture and the buyout markets. For a couple of reasons. We've all seen the studies. There's evidence that small funds outperform. There's evidence that diverse firms outperform. And we know that a large portion of the diverse managers are raising funds that are less than $500 million. So we think it's so important to not ignore the smaller end of the market. And so, it was with that in mind that we began discussions with Fairview, again, to expand our portfolio. We call it the Fairview Lincoln portfolio, the Lincoln Fund, very creatively named, as you can see, since we are based in Illinois. And so in Series B, Fairview's mandate is really to seek investments in that exact space. At the smaller end of the VC and the buyout markets, it's entirely focused on diverse GPs. It's first, second, third time funds for initial investments. It's funds under, sub 500 million. And it's focused this time on venture, 50 to 70% on venture. And then, with the rest in buyout and growth equity. So that's kind of been our evolution to date. We are excited. We've had great performance so far from this portfolio, and we are really encouraged and we're optimistic about the future of it. So thank you.
Very exciting. You just gave us some sense, Kim, on how long asset allocators have been having this discussion.
Yeah, a long time.
So it's very encouraging to see where we're headed. And so now I'm going to pass it on to Cindy.
Great. Hi, everyone. And it's so great to be representing Fairview today. I'm very excited to be here and joined by Natalie, Christine, and Kim. I know the question was about, our journey into this industry. So I'll keep that short. I'll just say that my journey into finance and into asset management, and then now more specifically into venture, it was not a straight path. I had many odd jobs and internship along the way, but what I would say is that every odd and interesting job along the way really contributed to my mindset that I have today, and either that's problem solving or leading my team. And of course, women and immigrants before me paved the way for me and those like me to participate in this industry in investment banking and private equity and now at Fairview. And I think I owe that to Joanne and Larry for starting the firm 27 years ago with the true north and our true north focus on investing in diverse and emerging managers. And so when I joined Fairview, 13 years ago, I have very, minimum insight in terms of this space. And Joanne really took me under her wings and taught me the business and gave me tremendous responsibility very early on. As you know, we are, we've been in this business in venture and also in emerging manager business for 27 years now. And so the longevity and the network, some of them were passed down to me and the other partners. And so I have the pleasure of sitting on the AIM board, and other partners have board representation at the NAIC, SCO, and the like. But I'll just say that when you have a seat at the table, you have to speak up. And that's the one thing that I really learned, over the past 13 years. And so Fairview, we're not just investors, we're advocates for women and minority managers. We have an open door policy. So we talk to almost everyone who knock on our doors and like to have a conversation. And sometimes those conversations lead to a capital investment and sometimes they don't. But along the way, we see ourselves building this expansive network, and we're all different. And Fairview treasure our diversity. Clearly, I'm Asian American and women, so my deal flow tends to be more of that flavor, if you will. And so I do talk to a lot of women in terms of either starting their own fund or raising and building a successful franchise. So when Joanne suggested that we lead in this space and host a webinar focused on women investor, I was all in. So pass it back to Michelle.
Thank you for that, Cindy. Incredible. I just think, like you said, giving women the ability to speak up, right? You see a whole new world. Just to throw some statistics out there, we had an earlier panel of women, and now this, asset allocators speaking. So to put everything in perspective. So according to the Knight Foundation's 2019 report, firms owned by white men manage a stunning 98.7% of the $69 trillion managed in the US asset management industry. And so, we were talking earlier before we got started, like we know this business isn't fair, right? And you can really get caught up in that talk, right? But could this be an opportunity for women-led firms? We're in a moment in history where Black Lives Matters, Me Too movement, and the diversity gender gap in asset management. So let's zero in on the opportunities for women-led private equity firms to grow their market share in this space. So with that said, what are the top 3 barriers for women GPs to get capital? I'm going to start with you, Christine.
I mean, whenever I hear those statistics, I'm always a little shook by them. And then I think if we zone in on the allocation to women of color, the statistics get even worse. So I think it's always important to kind of keep that top of mind when we talk about allocating capital to women. I guess for me, there are almost like 2 biases that exist. One is this network bias, and another maybe is implicit bias. And the network bias we heard a lot about in the prior conversation. But if you take the fact that right now the industry is controlled over 90% by men, and it's a really insular business where networks matter, where a lot of deals are done by people you know, people you trust, people you went to school with, and that flows through the whole supply chain. It's tougher for women to get in, right? And so I think that's one. But there's, as you saw on the panel before, I mean, I think there's a huge network effect already going on with these women GPs, which is incredibly exciting. So a real opportunity there on the flip side. And I think that the second, for me at least, is around implicit bias. And I think this leads to women being undervalued. And whether that's through questions they get asked in a diligence call that are different from questions that get asked to men, the kind of requirements that are put on women in terms of degrees and experience and track record, just to kind of develop the comfort and mitigate the kind of perceived risk that investors see. And even I think sometimes when women have a really successful fund 1 or early performance is looking great, people tend to doubt it as more of a fluke. And so they have to kind of go above and beyond and work that much harder. And so for me, those are 2 hurdles that kind of are out in the market right now. But at the same time, to be positive, I think there's a lot of great traction in the market.
Yeah, double standards, definitely out there. Anyone else want to comment on that?
I'll say this, Michelle. I think Christine really nailed it there with the kind of network and implicit bias, but also there is a strength in numbers that's kind of obvious, right? But and I'm not one to sit around and whine about the fact that I'm the only woman in the room, or I'm the only Black woman in the room, and I'm the only, but okay. But that has an impact. It does. And when you talk about barriers, here's one I'll say, all right, is that, women, and I'm generalizing here, so please forgive me if I'm generalizing too much, but I do feel like we are generally very rule following in how we operate, all right? And it's not to imply that men are not, but I think was it Christine who said it earlier? Like, you're in that room, I think it might have been Daphne who said it earlier, you're in that room for a reason, okay? Like as a woman, you might be the only woman around the table, but you're there. Speak up and advocate, right? Don't think for a minute that you need to dismiss yourself because someone that you've known for years, went to B school with, what have you, is on the table right now. You don't need to recuse yourself, not necessarily. Make sure before you walk out of that room and advocate that you need to do so. That's all I'm suggesting. So what do I mean by that? Like, there are a lot of our peers, dare I say male peers, that would never even think of doing that. It's just not the mentality. And I think that can be, I don't know what you call that necessarily. I don't know if it's, I don't know what the name of that is, but I've seen it, and I've seen that type of kind of way of that kind of mentality, like thinking that, well, I almost know them too well, and maybe I shouldn't be in the room. Maybe I shouldn't vote on this. Maybe I shouldn't advocate. No, you go ahead and you do so. And maybe if you're not supposed to vote as per the rules, no problem. But maybe you're allowed to speak before you leave. Speak before you leave. Like, don't Don't just think you can't, because once you leave, who else is there? That's all I mean. You know, the numbers. So what do I see as a barrier, Michelle? The numbers. The numbers are never in our favor. So don't tell me that it's all about your returns. I mean, we're all looking for risk-adjusted returns over time. I mean, that's what I think many, asset, owners like myself are looking for. But, I think these things are real, and you've got to think about that. Do I have a track record? Well, yes, I do, but I wasn't able to bring it with me, I mean, that's a long road. I won't go down that one, but so there are other barriers. I think the network implicit bias that Christine mentioned, and I think we lose some time just in the sheer numbers of people that are in the room with us, and that matters. And to pretend like it doesn't is just, I think it's unreal.
No, I appreciate that candidness. We all trying to figure out how do we support women in this industry, and I think you highlight a very important way, as did you, Christine, as well. Anybody else want to say anything about that particular?
The only thing I might mention, I think they're great. I completely agree with the other responses, but I think there's also a tendency as an LP, I guess I hate to say this, but there is sometimes a tendency on the part of LPs to look at larger funds first to deploy capital, right? Because look, you see it, private equity allocations in public funds are generally increasing. You've got increased annual pacing requirements. Many public funds have restrictions that you can't be more than a certain percentage of a fund. So, there's many public funds and corporate funds, and all funds are short-staffed for the most part. And so there could be a tendency really just to look at the largest funds and don't bother with the extra work. But we think it's worth it. It takes a very intentional approach to access the smaller part of the market, and so we just need to keep working at it, keep knocking that barrier down. I think we can do it.
Yeah, Kim, I think you're right about the smaller fund size. As you know, we publish our Women and Minority Diversity Report, which is a must read. I would say, I think most of you have read it. And it's like more than, it's about 50% of funds raised from minority and diverse and women-led firms is less than 100 million. So we really need to be focused on these smaller size funds and making sure that they have an opportunity to present, and that, us as allocators keep an open mind in terms of how to navigate in that realm, because it can get very noisy in terms of the caliber and also the quality of the investors, but that doesn't mean that we dismiss them straight away.
Thank you for that, Cindy. And I know we have, around 200 women-led GPs on the line right now or on the Zoom. And I'm sure they're wondering, how would you recommend GP, women-led firms approach you to get vetted for an allocation? Why don't I start with Kim on that?
Sure. Well, I think there's really a couple of different approaches that we would encourage or suggest, at least to start. I think I mentioned we do work with two partners in the private equity space. Axia looks at funds of $300 million and up. They primarily look at small to mid buyouts, but they also do some venture and growth as well. So I'm happy to share contact information for the people at Axia on our account. We have so far they've been very good, and I think they will continue to be very good at responding to firms that reach out and providing feedback. And then our second partner, of course, is Fairview, and Fairview focuses, at least for us, on funds sub $500 million. They're looking at diverse-owned firms, and in Illinois, the statute requires, that means 51% or more owned by minorities or women. And the Fairview program focuses on venture 50 to 70% venture. And then the third way, feel free to reach out directly to me, and I'm happy to have a conversation and to learn more about your fund and to make an introduction, if that helps, a personal introduction to what you probably already know Fairview, but I'm happy to introduce you to Axia as well. So, and we also have some events throughout the year, some webinars. We have a diverse manager week in August. We've done 3 years in a row so far where we focus on a different asset class every day and provide potential managers opportunities to come in and, well, it's been virtually the past couple of years, but to come in and not only meet with staff, but also meet with our partners at the table. So we plan to continue to do that next year as well.
Thank you for that. Moving on to Christine.
When I was initially thinking of this question, I almost flipped it to like what LPs can do to support women more on the GP side. And I was thinking, it is about being intentional. It's about building a diverse team yourself, having a diverse investment committee that you're reporting to, and holding yourself accountable. I mean, we spend a lot of time looking at our pipeline, ensuring that it's represented by a diverse group of GPs. We're reporting on that in a transparent way to our RIC by gender, race, ethnicity, 5 times a year. And I think, and spending time, I think, understanding like why you're saying no, right? What are the reasons, and are you over biasing in some way that you're not even aware of, right? So I think that's like the homework or getting your house in order as allocators that we all need to do so we can be as supportive as possible. But so I'll just share those on my own like homework for the LPs in the room.
Appreciate that. Natalie.
Thank you. I certainly don't mean to turn this into a commercial for Fairview, okay? But I have to be honest. I mean, we chose Fairview for a reason, to help us partner. We, as Kim had mentioned when she began her program, we have a fund of funds program, and I didn't really give enough detail on ours, but I will now. We are a $3.9 billion defined benefit plan for the civilian employees of Dallas, and we have a 7.5% allocation to private equity. I'm allowed to go to 10%. Right now I'm at about 8.4 last time I looked, just the other day, a board meeting. So we have 3 fund managers. 2 of those are fund of ones, as I think was also previously mentioned. So we have a bit more discretion there. So my point in all that is simply that I have been able to meet with people, kind of hear about people. It is a very small world. We know that. I mean, look at our panel. Like it's so small. We all know each other. We get to conferences, and I'll say to Christine or Kim or Daphne, hey, who have you been talking to? Who's raising capital? Who are you excited about? Like who would it be? And you know what I do? I call Joanne. I say, I need you to take a meeting for me. Or, I want your thoughts here because I've heard this about this fund. Do you know him? Have you heard of him? What have you? And I think who you partner with is so important. This was also mentioned on the previous panel in a different context, but partnership is still very important. With whom you partner is everything. And I think what you all said earlier about just the way you conduct business is true. I mean, what Joanne said earlier is true. She's never told me no. And I circle back with people. I imagine that Kim and Christine probably do this too, but I don't just say, oh, go, okay, call Joanne. Joanne's going to give you a call. Bye. No. I circle back. I want to know, when are you discussing, when are you talking to them? How did it go? What do they say? Are you going to follow up? Like, what's the next step? So I ask questions. So for us at Dallas, it's a little bit specific because we don't have, we have a fund and a fund of one structure. So we utilize our fund of fund managers to help us kind of navigate and screen and look at new managers. But I mean, I've met with women-owned firms, minority-owned firms at conferences. I've met a few, like I've met people everywhere, and I will send them to my fund of fund managers, and I follow up, and I follow them. I want to know what happened. If we said no to you, and then I look and you've raised this, huge fund, and you're oversubscribed, and I'm going to want to know. I'm just curious. Can you remind me why we said no? What was the thought there? And now we're trying to get in on the next fund, and they don't want to give us any because we didn't go in the first one. So the answer is I try to really utilize the partnerships we have on our fund of funds basis and then make sure that we have a very active dialogue with them. We do not offload, we do not outsource, we do not. It is a true partnership. And I've appreciated that with all our managers, most of all with Fairview, because I found you all to be just very good at this and incredibly responsive. True, not intended to be a commercial, but true.
No, I really appreciate that. And I have to say, that's what we strive to do. And I'll pass it on to Cindy to tell more.
Yeah, like I said, we really have an open door policy and an open mind and prepared mind policy, and that's how we operate. You can contact me directly or anyone on the investment team, and we'd be willing to put together something on the calendar. I have managers reaching out via LinkedIn, another great tool to get to know one another, and always happy to do that. I would just say that we provide more than capital. We also provide what I think are great advice from 27 years of business in this area. I think, of course, most urgent need is the capital, but sometimes if the fund is not quite yet ready for what Joanne would say, prime time, we are there. And we are your advocate until you become prime time. And there are many managers we've passed because they were not institutional quality ready. But when they are, you bet we'd be the first one to support them. And that's why we're also on so many advisory boards for these emerging, diverse, newer funds, if you will, because of that quality time that we have spent together early on.
Yeah, thank you for that, Cindy. We're running out of time. I knew this panel was going to go by fast. I mean, I'm just happy to sit here and speak with you all day. I'm going to combine our last two questions. And, it would be good to hear what advice, like the last panel, what advice would you give to the women who are listening in here on the Zoom right now? And also, if you can couple that with, what do you predict, for the future? How do you see, things panning out, say, over the next few years, et cetera? So why don't I start that one with Christine?
Great. Well, in terms of feedback, I guess I'd say two things. Tell your story. Everyone's got one. We've heard some amazing ones today. It's really what's going to differentiate you. And preparing that in a way that's authentic and real and kind of tells your lived experience and how your investment thesis kind of resonates with that is so powerful. So trying to be like what you think LPs want to hear is not the way to go. I just continue to urge that. And then second is that it's a long game, right? I think when we're making commitments, we're hoping to be really long-term relationships. And so you think of like the long-term relationships you have in your life, you spent time kind of building that trust, and it requires a bit of time to build that. And I know there's like the anxiety and you want to get your fund closed as soon as possible, but I think investing in that, and maybe some LPs will say, not now, but I'd love to track your progress. Invest in that because they're really serious about doing that, as Cindy almost just alluded to. So those would be my two pieces. In terms of predictions, I tend to be an incredibly optimistic person. So I think I am so excited by the talent in the market right now from women. I think it's a really exciting time. I just wish we had more capital to allocate because there's so many exciting opportunities that I think are hitting our collective desks. So I feel optimistic that those networks, that network bias that I spoke about is going to start breaking down. And we're going to see more women kind of moving through. And this is an exciting time with a lot of women launching funds. I think it's a unique time and people paying attention to issues of race and gender, as you said, Michelle, and I hope we can kind of capitalize on that. And it's stickier and it's not like a moment in time where we'll be having these conversations a couple of years from now. So I'll stay optimistic.
Fantastic. Kim, you want to go next?
Sure. So just to echo what Christine said, in terms of advice, I would say be patient. It does take time to make the contacts and build the relationships with the LPs and consultants, but be patient and don't give up. And I loved what somebody said on the GP panel. It's not a question of if, but when. We, as LPs, we want you to succeed. We want you to be in the market because your success can be our success. So I would just encourage you to keep fighting the fight. And then looking ahead, I would echo Christine's thought. I am optimistic by nature as well, and I see the numbers, the number of women GPs growing. Fairview, so someone cited they have great research on that sort of thing, and it's true. The numbers of women GPs are growing. There's more focus than ever on DEI. Not just in the investment industry, but outside as well, which is so encouraging. And if you couple those positive dynamics with the strong performance that we're seeing from some of these women GPs, it's hard for me to imagine it not, leading to even greater success. So I'm very optimistic as well.
Fantastic. I'm going to go to Cindy and then to Natalie.
My one piece of advice for folks starting their own franchise is to set the tone for the culture of your firm early. And that tone starts with you, the founder. And also, I think, given that, and this is a woman audience, so given that there's woman-owned firms, I think the culture should be that you should be inclusive and be diverse in the way that you recruit. And it could be through, different recruiting methods. And there are definitely women talent out there. And sometimes, it's not through a headhunter. I think it's through your expansive network, through trade organizations that you might be part of. And then also picking those partners carefully at the onset. In terms of prediction, I echo Christine and Kim in terms of the growth and the number of funds and women-owned funds that we'll see. That when we tracked our data just from 2014 and onward, the number of women and diverse-owned managers grew at a 26% CAGR. And so we expect that growth to continue. So like I said, it's going to get even more noisier. So definitely we'll need to have the right approach. At Fairview, we like to say to take a programmatic approach to a diverse and emerging manager platform. And that also means, having continued success and also more capital to back these fabulous GPs who might be a fund one and women owned and diverse. And I'll stop there.
Thank you for that, Cindy. Passing it on to you, Natalie.
Well, Michelle, everything's already been said. I agree with what everyone said here. A couple things I'll say. I too am an optimist. I am. However, I have to be honest and just say this. It is a little bit, concerning, maybe sometimes depressing, when I walk into a room at a conference and the numbers haven't really moved much. Maybe it's just me, okay? But they haven't. Like I found my old ATP analyst training program picture from blank years ago, and it doesn't, with three of us there, and the numbers aren't that different. I do think things are moving, but man, they seem to be moving slowly. So a couple things I'll say. Look, everybody knows in this business, you get a lot of no's. A no is not a no forever. It's a no right now. I mean, we said no to somebody that we came back and said yes to a year later. They took the no so well, we had to say, it was just like, wow, okay, well, let's keep in touch. No, I mean that. Let's keep in touch. We hired them the next year. We have another manager that, that didn't happen. Listen, you're going to get told no a lot here, but you can't let that stop you. Like you can't. And I know that's easy to say, maybe harder to do, but it is what it is. That's number one. Number two, what's helping my optimism is, I got this email from my B school the other day telling me that the Wharton class of, oh my God, 21, 2, 3, 23, I think it is like 52%, 51 or 52% women. A Black woman is now dean of the business school and it's just doing extraordinarily well. I mean, just all this, and I was like, wow, okay. Like, so that kind of gave me, when I think about the future, that made me feel very kind of optimistic that, okay, there'll be more women in business school. That's nice. That speaks to the pipeline. And then, the next day, not the next day, but just yesterday, I'm explaining to my 11-year-old son, what happened to the coach of the Las Vegas Raiders and how he'd said some things about all types of people, but he also made comments about women. And my boy's 11, he can read it. He's like, whoa, why can't women be referees? Wait a minute, what is that a problem? I'm like, no, it's not. It's not. So, sometimes it feels like 2 steps forward, maybe a step back. And, I'm not going to extrapolate on one example or another. I'll just say that, in this business, I would say, again, a no right now is not a no forever. And if you can't be kind, maybe be quiet. There's a lot of negativity. There are a lot of naysayers out there that'll tell you, your track record is not long enough. Your performance may not be good enough. I agree with what I think Christine said earlier about being authentic, your authentic self. How many pitches do we hear a day, a week, a year, right? You can tell when someone's trying to sell you, and when their story resonates, and then it feeds into their investment thesis and their deck, it comes to life, and you understand, oh, this is how you got into space. Okay, that makes sense. You know it really well because of this. Okay, and you partner with it. The dots get connected when you're authentic, when you can do that. And if you can't, then I would kindly, respectfully think that maybe you should kind of look at what you're doing and how you're doing it. So that's it for me, Michelle.
Wow. Oh, what a great talk. I love your optimism, all of you. I'm the same. And the message here that you all had is, don't give up, right? Don't give up. And I think that resonates a lot. And so I have to close this panel, unfortunately. But in closing, I really want to thank our esteemed panelists for sharing their thoughts with us today and for their deep commitment to advancing diversity and for building programs that include underrepresented GPs in their investment portfolio. I'll end with a quote from Fuller. I like quotes. I'll end with a quote from Fuller. So, you never change things by fighting the existing, is what he says. To change something, build a new model that makes the existing model obsolete. Our fearless investors are leading by example, building a new model and proving that progress is possible by acting on the present moment and opportunity of women and minority-owned firms investing can broaden the access to capital while realizing the full potential of private markets. So I just want to really thank you. We appreciate your partnership and thank you again for being here today with us.